Good morning, traders. Hope you're doing well. We've got to Friday again, and lots of stuff going on. Still, geopolitics ruling the roost, as usual. Get used to it, folks. Morning, Kate.
Happy Friday, Ryan, and everybody listening or watching us. So, for those celebrating, happy Valentine's Day as well. Yes, it's all happening, or should we say, not a lot is happening right now with all those tariffs and everything.
Yeah, lots and lots and lots going on. All a big mix. I don't know if the market knows which way to trade it either. So we'll get through the headlines. There's actually not a lot of fundamental stuff going on. It's all about the other stuff. So we'll get through that anyway. First off, Japan's lower house has approved the government's nominee for a new policy board member to the BOJ, Junko Koide. Do we know anything much about him, mate? I haven't even had a chance to look him up.
No, I haven't. No, Ryan. I didn't have, same as you, didn't have the chance to look up much on that.
Okay, well, we'll make that homework over the weekend. Right, we've got the RBA next week. Reuters are out with a poll showing that 40 out of 43 economists expect the RBA to cut. That's 90% of them expect the RBA to cut next week. That's up from 40% in the January poll, so a big jump in expectations for the RBA next week. 31 of 41 forecast another 25 pip cut in the April-June quarter. The median forecast see the interest rate down at 3.6% by the end of September. So the market getting a bit more dovish over the RBA. I've still got the feeling they might be a bit early, but we'll see from the RBA, and that's even while I'm short Aussie dollar. So I'd love a cut or five to come, but we shall see. I'd like to be objective about these things. Kay, early thoughts? Are we going to get a cut, or there's certainly been no indication? They haven't set one up at all, really.
No, so that would be probably the small surprise trade, although everybody's well, not everybody, but I mean a fair percentage of people is thinking that it's possible this time. We should just not forget that Bullock is a hawk, and maybe she needs more convincing. I also think that she doesn't want to be influenced, but by whatever or at the RBNZ would like to do. There's still a bit of uncertainty surrounding tariffs, etc. But it could be that they go. I mean, the data are touch and go, right? I guess there is a fair case to make for them to do a smaller cut. I don't see a jumbo cut, not as we've seen elsewhere, but it could be justified to do one, but the jury is really out, and I don't know which side I really want to lean right now. Put a gun to my head, I said they cut.
Yeah, okay. You've made your mark now, mate. That's it.
Yeah, well, I mean, but it's really in the extreme condition of somebody putting a head to my head, a gun to my head. Sorry, what am I saying?
Yeah, I don't know. I'm obviously short Aussie dollar, so they probably won't cut. That's the way I'll look at it. Right.
Yeah, but you're in the cross, right?
Yeah, I'm in the cross. So
you're not short Aussie versus dollars or versus US. So I mean, there is a bit of an element of, if they both go, probably your Aussie Kiwi is I don't know, stable, or depending on who cuts the largest, maybe even going down back a little bit.
Yeah, but if the RBA hold and the RBNZ cut, I've got a double whammy on my hands. But yeah, we'll wait and see. Anyway, I'll look at Aussie Kiwi in a minute because it's moving a little bit today as well. Right, bit of data from yesterday, PPI data. Now that came in, where am I, down here? That came in reasonably hot as well. headline PPI coming in. It looks unchanged, but it beat expectations, but there were higher revisions to last month. The core PPI beat expectations by 3 pips as well, although it is a point down, again, only on the fact that the prior month got revised higher. Now, first look at all this data, the PPI is pretty solid. Okay, so and this is something that Powell remarked at in his appearances this week, that they'll be watching, the Fed will be watching PPI because of its feed through into PCE. So it's unlikely we're seeing PCE going down significantly. However, 2 things. First thing, PPI data can be far more volatile. So this wasn't actually a really big move. Yeah, you could say versus expectations, it was a decent move, but given the overall moves that was roughly unchanged, it wasn't that volatile. Also, a lot of people have been picking through the components to say that a lot of the components they see going into the PCE have come down a bit as well. So we got a little bit of a quick turnaround in what we saw in price moves there, but I don't think it changes everything too much. Markets has pretty much gone back to September, give or take, in terms of the next rate cut from the Fed. So we were pushing out to December. We're now scrolled back a bit to September, but that's a fluid situation, if you will, going forward. Jobless claims as well, nothing. So I think these are broken K, these jobless claims. I don't think I've ever seen them as steady as this, not for a long time. Look at that.
Mm-hmm.
Anything to take from any of that data?
Yeah, throw it away until it really moves. I mean, I mean, unless this thing is really starting to move, and I guess a lot of people are always waiting for this to start to creep up. It could be, but when? I mean, when will we have to wait until for this to really start showing something about cuts or those government layoffs? I'm not even sure if those government layoffs are in there. Probably. Until that goes. But then by then the market will have anticipated it as well, and it's probably still not going to be a big mover. It's one of those data that pops up, and dare I say, retail traders want to make something big out of it. But unless, and we've been saying that on our shows, unless we start to have like really big jumps in that and holding. Not having like the one-offs that we saw last year, it's going to be one that you just well, basically ignore.
Yeah, you just got to look for, if we start trending somewhere, i.e. Headline number above sort of 400,000 and continued claims going through 2 million, something like that. But yeah, nothing to write home about with that lot. What I would add on the government jobs things, I think the deadline's now passed, and around 75,000 people took the redundancy, or whatever you want to call it. But that, you shouldn't think that's the end of it. Just because other people haven't volunteered for it, doesn't mean we're not going to see big job losses in government payrolls, because Musk and his mates are going to be cutting departments, slashing staff. He's given government workers the opportunity to take a redundancy or take a financial package. Those that want to stick it out might find they're out on their ear anyway. So that number could still grow further down the line, and then start impacting the jobs numbers at some point. Right, let's get into all the geopolitical stuff. So Trump got his pen out and started signing, well, some executive orders and some more memorandums. A lot of this tariff stuff, reciprocal tariff stuff, has got deadlines on it, some of them out to April. So again, it's baiting the hook to get people around the table. So we've gone with these reciprocal tariffs, saying whatever they charge us, we will charge them. And this will be over and above the steel tariffs. Also, cars and pharmaceuticals are in the frame as well. Car tariffs will be coming soon. they will consider countries that use VAT, value-added tax system, as a tariff. So VAT taxes will be viewed as a tariff. So that's a lot of Europe and the UK as well. I don't know how that works, Kay, because America's got a sales tax, which is effectively VAT. So is he saying that, well, they're going to ignore their own sales tax and hit everyone else with that?
The way he spoke was that it's going to come on top of anything else. Well, he singled out aluminium, steel, and I don't know, and pharmaceuticals, but it seemingly instructed Lutnick to go and make a study of country by country VATs, and that he would reciprocate against all those VATs. So I understood, and that's what the market seems to have understood as well, that it's going to go on top or next to whatever is already in place. Now they may come up saying like, okay, we've got already our sales tax there and there, so that compensates. That is something that remains to be seen, which is not completely clear, but according to his words, at least, it's going to come on top or next to whatever is existing.
Yeah. What do you make of the severity of this reciprocal stuff? You know, when it's talking about just VAT. I mean, obviously the UK, we charge 20% VAT.
Not on everything.
So it's a big thing.
Yeah, maybe not on everything.
Vary.
Yeah, but you charge local VAT, but that's where the thing is perhaps a bit complicated as well, because if you charge 21% VAT on everything, like services included, how is America going to slap VAT, a kind of VAT on stuff that you charge here? So there's a lot of homework to be done there, and but also I would say that they will particularly look at American products and services, and then likely, yeah, counter that. But it's all but clear. It's not really clear what Lutnick is going to come up with, right?
Yeah, he certainly needs a big abacus for that one.
Yeah, because if you, for instance, you're an American, let's say an American car maker, Ford or so, but you produce in the UK, and there you pay VAT in the UK. What's the Americas going to do about that?
Yeah, exactly. I think for trading here and now, we've now had the confirmation of these reciprocal tariffs. Your average market trader isn't going to worry if the price of a penny is going to be adjusted by 30 pence or not. So we're probably going to move on swiftly from this to whatever he's up to next. But as you said, the Canada tariffs, the reciprocal tariffs, everything he's done so far, he has got a timeline and a deadline on it. So the market's probably going to forget about it pretty quickly until we get the next round of tariffs on whatever.
If I may say about that, the thing is, what the market is looking at is that negotiation time that has been given. First of all, it was Canada, Mexico. Now it goes like, oh, Lutnick will need until at least the 2nd of April, and perhaps a bit longer, because if you look at that world VAT rates per country that I posted in our chat, he's gonna have his work cut out to go country by country. But yeah, I think that what the market got of it, and I think rightfully so, is everything comes with a negotiation timeline, and that means that it's not like black or white. It's everything is in between, and is up in the air right now. And I think that is what the market is reacting to, basically.
Yeah, and we know the market has a goldfish mentality, so it'll probably forget about it until a week before those deadlines, and then it will see who's doing what. Right, on with Mr. Trump. He said that the EU lowering tariff to 2.5%, that was a big win. I think that was something they did on autos the other day. It says it expects some countries to reduce or terminate their tariffs. It says BRICS will be hit if they play with the dollar. And apparently he's got a very big trade deal to announce in the future. He's been having India PM Modi over for talks, and they're talking about doing a lot of deals. Modi saying they have set a target of doubling bilateral trade to attain $500 billion by 2030. There's talks of India buying more US energy, oil, and the likes. So they'll obviously be looking to swerve tariffs as well. A White House official came out after Trump saying they're not ruling out just a flat global tariff, that Trump could begin to impose some of these tariffs within weeks. We'll examine the most egregious issues, i.e. the countries with the biggest trade surpluses first to the US. Right, over to the Ukraine stuff, because this is grabbing markets' attention as well. EU's Callas says any deal on Ukraine behind our back won't work. So that's a follow-up to yesterday's stuff where Trump's arranging and talking to Putin and Zelensky and arranging stuff. They've got a meeting today with US officials, not Trump himself, but US officials and Russian officials and Ukrainian officials happening in Munich. They're not supposed to be meeting till 5 p.m. local time, which I don't know, I can't remember what Ukraine time is, probably a couple of hours ahead of us here. So that's when we may get something. But Zelensky has said that Europe should be at the negotiating table at the end of war. So that's Europe's getting a bit of getting their nose put out of joint that Trump's speaking to Putin and Zelensky and not involving them. But I can see it from Trump's point of view. He's likely to say, well, this war's been going on for however many years and you've done fuck all about it in that time, so I'm doing something about it. And he'd have half a point, probably. But Trump says Ukraine would have a seat at any table in any peace negotiations, along with Russia. Would love to see Russia back in the G7. Ukraine apparently, though, does not plan to talk with the Russian side at this Munich conference. So we'll have to see what they are actually going to talk about it. Kay, we're seeing a bit of we saw it earlier in the week. We're seeing another sort of bit of a risk on rally on this peace talk stuff. It's a bit of a slow burner, but it's building.
Yeah, definitely, Ryan. Obviously, there's different point of views, which are always going to be there when it comes to conflict like this. But if you look at it from a pure trader's point of view, less tension means better for risk. That is undeniable. As we've already been saying, even if you take just the case of the euro dollar, like for instance, it has had an impact that Ukraine conflict it's been waning over time as usually in markets, but it had a negative impact. So it is logic that when the tension decreases and when the parties are ready to go and negotiate, that this pressure comes off a little bit. So that is what's happening now. Attached to that, I would like to straight away say though that from a market point of view as well, if like Trump is now pushing for to find a solution between Ukraine and Russia and himself without explicitly inviting NATO, let alone the EU. Zelensky just said, by the way, that he doesn't think that US has already a real peace plan in place, and he did say that NATO is the cheapest way to protect Ukraine. So he's fighting, not fighting back, but he's like putting a bit of caution on the against everything. But if you look at how a potential plan would go, it would cost Europe an arm and a leg, and that is where I am still a bit reluctant to see this as a lasting positive for the euro as a currency. So details are vague. Time will tell. And yes, the immediate market reaction is completely justified and logic. But for how long? That is the question when I look at it from a market point of view.
Yeah, and Defence Secretary Hegseth is out in Poland as well, and he's just said US, Europe, and Ukraine will be involved in peace talks. He says the shape of Ukraine borders remains to be seen, which that's obviously going to be the big sticking point if there is peace and everyone's pulling back. Where are the lines going to be drawn? How much of Ukraine is Putin going to have to give back up, and how much of Ukraine is Ukraine going to keep? That'll be the front and centre of those negotiations, no doubt. He also said, Hegseth said that European allies should take primary responsibility for the defence of Europe. And also, as I've just said, neither Putin nor Zelensky will get all that they want. Talking about any deal. Trump, he seems to have brought forward his executive order signing from 3 p.m. He did 1 p.m. yesterday, and he's doing 1 p.m. again today, which is 6 o'clock GMT. Oh.
Yeah, but he tariffed the timeline there, because when he says 1 p.m., it's usually the 1:45.
Yeah, exactly. So we're getting more crap coming out on a Friday night. The wife's going to love me for that on Valentine's Day. Right, that's it from the headline front. Anyway, one thing I did just want to show you boys and girls, if I can get it up one moment. Let's go, is that we do have an absolute ton of options expiring today, some quite hefty ones as well. Not that big top side in euro dollar, but if we see any pullbacks, we got 5 billion going off around the 104 figure, which obviously, well, we're seeing a little bit of a come down in euro dollar at the moment, but some decent numbers around 152s. We got 3 billion in dollar yen, dollar CAD 142, which we're pretty close to as well. It's got a half decent one there as well. So got a lot of options expiring today, which I never like doing on a Thursday night, 10 o'clock in the evening, putting all those together. But that's a sacrifice I'm willing to make for you boys and girls. Data-wise, what have we got? I don't even know.
Retail sales today, yeah?
Retail sales, yeah, good old retail sales. So that'll be maybe a bit of a swinger for the dollar. I think, given the mood the market's in and that we're trading this risk more than anything else at the moment, I'd look at this retail sales data. Maybe if it knocks any dollars out of sync with what's going on. So if euro dollars remaining very strong, if we're still up at high levels, and the mood's still favouring that side, if we get a strong retails number, that might be a dip that traders will want to hit. And so look at it from that point of view. I think that's certainly how I'm going to be looking to potentially trade it as well. And we got industrial production later on as well in the afternoon. That will probably be a bit of a minor number, but worth looking at. Anyway, anything else for you there, Kay, amongst that lot?
Yeah, I think the retail sales for sure. Again, I would like to say most of those will have been taken ahead of the inauguration, which could mean today, if the customer says like, oh, there's a risk for prices to go higher once Trump is there with tariffs or so. Well, I mean, that is if the customer already took that into account. it may be a slightly better number, but I'm just going out on a limb there. I'm don't really have a clear view on how those retail sales go, because it's also the January after the end of year festivities and stuff like that. So there could be a setback as well. I'd say, looking at how the dollar trades, I am with you on that one. I think we should find some rally sellers for now on dollars. That is how I'd view as well. But again, choose your dollar wisely. Every pair is not exactly the same as any other. So I'd say, yeah, choose it wisely, because if you got like let's say a bumper number, a surprise bumper number, I'm not sure if I want to sell dollar yen into it, for instance, or dollar Swiss into it. But I would take another currency, like perhaps cable, which is pretty big, or finally the commodity currencies coming off the ground. So maybe those ones are better ones to trade on a very negative number. Then you look at the low yielders as well. They would probably get hit. Yeah, and as you are showing there, usually what the market is looking at it lastly, and to make a decision, or to form the idea whether a move could be lasting, is probably the control group. So that's an important one to look at. So that's about how I look at this for today.
Yeah, absolutely. And Mike says January retail sales are usually
Yeah,
lower after
yeah,
Christmas spending.
Mm.
Yeah, that can be a seasonal feature. Obviously, everyone has a big holiday spend up, and then everyone's skint in January. So it shouldn't be unexpected if we get softer numbers. I mean, we're not looking
Mm.
for anything gangbusters from these retail sales anyway. That control group is the main one to keep an eye on, because that strips out all the autos, gas, and all the other essentials, shall we say. But headline sales expected down 0.2 anyway. So yeah, be on watch for a soft one, shall we say, as long as it's not too horrendous. But conversely, if it is another solid one, that's another green light for the US economy anyway.
And I would say it will probably overshadow the IP or manufacturing production, unless we get huge divergences. It's always the same thing. You got some data are more important than others, but if the lesser important data see a huge divergence of expectations, they can come back to the fore. But I'd say the mood that the market is in right now, we are going to need to have like really very, very good numbers this afternoon to turn it around, because we have seen on two inflation prints that the dollar can't hold a bit.
Yeah, I'd also say don't ignore these import-export prices. The reason being, we've seen a lot of movement in trade numbers because of people probably front running the tariffs and all that sort of stuff, getting stuff in, getting stuff out quickly before anything happens like that. That can be something that we see in these price numbers because obviously they are trade related. So if people are, paying up a bit more to get goods quicker, that might be reflected in there. It's not something a lot of people are going to look at and trade and whatever, but it will feed into the inflation picture nonetheless and give us an idea if that was happening as well. Right, let's move on, start looking at some prices. So we're on euro dollar, might as well stay there. We've busted up above this 104.50, 60 area. We're trying to hold it. Let's come in a little bit closer. We're just trying to hold the top of it at the moment. So we've had plenty of these times when we look like we're getting a rally and then it just runs out of steam and we move back into the range. So just keep an eye here if we manage to hold this level up here. Line in the sand is down there at 50. If we're back under there, then maybe the wheels are coming off again and we're going to see, as I say, stuck in the range again. If we do move higher, then the 105, 105.30 is obviously the big zone. And it is a pretty big zone because up here, just above it, we start getting into more of the fibs from these two phase moves here. So that's going to be a big test for the trend. And then we're getting into the big 106 area as well. So there's a ton of big stuff up here from 105s upwards. Okay, it's a big level, big area that it's got to chew through if we're going to keep this move going. But it's looking more positive. As I said, first thing you want to see is a trend stop going down, and we've definitely done that. Can we take on this area, Kay, or is it going to need some extra headline impetus?
I'm going to say we are. It's a very good possibility that we're going to have a look into the 105s at some stage because of the dollar. That's the main thing. The market is trading positive note. It's all a lot of bark, less bite for now, and if the market wants to trade it further, and it's Friday, I think it is possible that we have a visit in the 105s now. We've been talking about this every time we were there, and how important the importance of that 106, that is to me still going to be the gateway for really to trade the euro much higher. For as long as we are below that broader 106 zone, the global picture to me has not really changed yet. Of course, we have bumped higher. We're 250 points off of the low. Yeah, that's a move. A 2% move is not to be frowned upon, but and it is possible to go and have a visit in the 105s. Now, to me, the real hurdle will be the 106s.
Yeah, thanks, mate.
Is
Mike,
it this weekend? Is it this weekend, Mike?
No, I thought next weekend, 23rd, 24th, I thought.
Yeah, I thought so too.
Unless there's some little regional election going on that we don't know about. Yeah, I think that's next week, Mike.
Yeah, 23rd.
And the ruling government or party is not expected to do well anyway. So that it'll be a surprise if things go their way. Will it affect the euro? I don't know. I think the market, there's already problems in Germany, just like there is in France, just like there is elsewhere, Canada. So the market probably, unless it's a real trouncing for the leading party, the market probably expecting to see bad news for them, and we'll see how Musk's mates, the AFD or whatever they're called, do in those elections. But that's for next week, mate.
I think, yeah, we can talk about that next week if you want, but it's really it's going to be a double-edged sword because it is going to fragilize the unity of the European bloc, but at the same time solidify the right hand side, and then you have to think at what and how they look at internationally, and as Ryan already mentioned with Musk, but don't only look west, look a bit east as well, and some of those right wingers, as we know, for instance, Le Pen in France. She's not Trump. She's not Putin adverse either, and I think there may be a bit of a risk coming.
Yeah, absolutely. But then, we haven't. Have we really seen much? We've had Wilders over in the Netherlands getting in, and there's not been
Belgium
much.
as well, The biggest party in Belgium now is also right wing.
Yeah, but there's not been much noise about that, is there?
No, no, because they haven't been handed, apart from Austria and then the Netherlands. But he's like right wing, but is he not like still a bit the softer side of the extreme? He's not extreme, I think, unless I'm mistaken. But the thing is, and without forming or without saying it's bad or good for the people also, but the thing is, will they get together at one stage? Because you can imagine that Germany, Belgium, they can't rule yet all together only with the right wing. But if you take all of those countries, getting all the right wingers in place and then joining forces, that may be a big change. You know what I mean?
Yeah, exactly. Oh,
Okay.
enough of politics. let's move away from politics. Um, who was Dimmy? Yeah, I'll have a quick look at dollar knock as well. I'm sure Kay's got some stuff to look at there.
Mm-hmm.
First, Aussie dollar. That's finally decided to wake up. Well,
Yay.
in reality terms, what wake up means, it's mean 30 odd pips gain, but we are above the zone now. We are above 63, and we are trying to get above this prior high. This area here was a bit of support, 63.30s. So it's got every chance now of building on this and having a look up towards some of these higher levels, going towards the 64 level. We're having a little pullback now. So again, keep an eye on this. You've really got 2 or 3 spots that this needs to hold. If not, we're back in the box. Here's one down into 63s, 63.10 is another. Then we've got the 2 levels on the zone. If we're closing the week under here, then I don't know what this thing's doing, because it's, if you can't hold on to these gains, then that's going to still look a very, very weak picture. But if we do, then we might get up to 64s, put in a test of the 38.2. That'll be the first real test of this trend. You can see just from here, if you take that spike out, we've just got a bit of a shallow uptrend going, but it's still looking pretty weak to me. Do you think this one's do you think this has got the legs for 64, or is it going to huff and puff its way up there?
I think it has. We've been working so long on that 63 figure 10, and then now 63 and a quarter. Yeah, it could have the legs easily to go to get to 64. Well, that's what I think anyway. That's how I'm positioned. I was on cash and on an option, and now I let my cash go. So because the option has taken over. Yeah, but I think I think it can. Especially that it's little weaker cousin that we were moaning about that had absolutely no vitamins in the kiwi. Suddenly found its mojo again, because we had a few better numbers out of New Zealand as well last night on their business climate numbers, and a bit higher food prices as well. So finally, that sprang to life, and both can run a bit together. Especially if we see one of those Fridays where the dollar is suffering a little bit after yesterday, and so yeah, I do think Aussie can have the legs to get to 64, and then we will see again.
Yeah, Mike, I don't know if you were late in, but already spoken about the RBA. Well, I've spoken about it for several days. My view, will they do a hawkish cut? I don't know. I'm not sure they'll do a cut at all next week, let alone a hawkish one. So yeah, my opinion hasn't changed in that sense. Aussie Kiwi, that's given up from the highs. I said this one 11.40, 50 area would be a bit of a sticky point. It's proved to be. We're now having a pullback. I don't know, if we get back under here, I might trim down some more of my shorts, because I've got an average above 111. So if I'm not feeling too keen on the RBA and RBNZ next week, then I might trim back a bit more if we're under this 111 area. But otherwise, technically, in a wider view, I would potentially still be interested in any rally up towards this prior high up here. Let's go a bit wider. Let's see what's going on, because it's still. Oh, I need to go wider than that. We're still in a very, very long term range. Okay, it's, fairly wide-ish, but it's still well within the boundaries. So I might still just play this from a technical standpoint. I don't see any reason why we should be rocketing up to 114 unless the RBA say they're going to hike and the RBNZ are cutting to zero or something. But there's room. I would not be surprised if the RBA didn't cut, and if the RBNZ did cut, then maybe we're going up to have a look at 112 or at least the high 111s after that. So yeah, I'll decide whether I want to keep the trade going or not, if it wants to have a look at the very top of that range there. Dollar knock. Let's have a look what's going on. Dollar knock. Let's come in a bit for that. Little bit of a breakdown we've got going on at the moment, Dimmy. Remind me what you're doing in this one. Kay, this is looking a bit, well, I would say looking a bit oilish, but it's more so the dollar. But what's this one going to do if oil craps the bed?
Yeah, that's the question. That's a really good question. It's lower because the dollar is lower across the board. Okay, it's not. I mean, oils are creeping up a little bit, but it's really following the dollar right now. Does the Norwegian krona have strength on its own to get through? 11.10 is a bit of a level, and then I've got like low 11s right under there. Um, if that breaks, we can go have a look below 11. I mean, 1080s will be the level below. But beware if it goes back above 11.20 in the short term. I think in the more longer term, I think it's a really strong zone between 11.30 and 11.50. I think it is a really strong zone. On and that is, in my opinion, enough for now. If it would get back up there, but weak shorts could may have to do a runner if we get back above 11.20 and then 11.30. But my overall view of the dollar is a little weaker today, so I would say yes, we can go and have a little look lower. It all depends where we really close the week and open next. Let's not forget as well that candies have this thing. They like a positive market, okay? Candies like a positive market, and since the market is a bit more positive right now, so this gnocchi move could have a bit more legs, and we see it on the dollar stocky as well. Dollar stocky, which is an accelerated euro, has also been dumping, and that's also helping its cousin, the Norwegian kroner, right now.
Yeah, I want to see that, mate. That one's moving a bit more than dollar knocky. But for your trade, Dimmy, you bang on the 100 DMA in this 38.2 fib. You're under this 11.14-ish area, so you've got a bit of a decision to make, or the pair's got a bit of a decision to make. If it ain't getting through there, then you might see it pushing back up again. There's K's 11.30-ish, which we're now finding as resistance as well. So technically it's breaking down. As long as you're holding under this 11.14, then you've got a chance of seeing further downside. But if you haven't taken any profit off yet, you might just want to think about it in case we do get a move back above there and it starts holding as support again. But if you're breaking through here, then you've got a bit of room perhaps down to the 50. So yeah, good luck with that one, mate. Run it as far as it goes. That'll be good. Well, blimey hell, just seen the clock, mate. I'm going to punch it over.
Yeah, I'm gonna go for just a few, and then we'll call it a week. First of all, dollar Schweiz, dollar Swiss. It's broken. It's broken. Okay. And I know a lot of people were looking at this trend line. It's broken around 90.40, 90.45. But as I've said as well, we have been trading this range with a bit of a spike below here, but we have been trading this 90.92 range for a while. So to confirm that we are going lower, this needs to break below 90, in my opinion. So that's a little one for those who are trading. It's a very decent trend line, 3 points, touch, and then the retest and a cap. So it is a very decent one. But I still would like, if you're not short yet, or if you're short, you know where your stop loss is, get back through 90, let's say 50, 55, and it's probably not a good idea to be short anymore. We need a break sub 90 here to confirm, in my opinion. And then let's go to the traditional ones. Gold is higher. It's higher due to a lower dollar elsewhere. Yes, I mean it's gone up a little bit again in the Asian time zone, which is still relatively important, but we have slowed down, in my opinion. And one of the reasons for the slowdown is the tensions. A little less tension is usually something that is not overly supportive for gold, but as I've been saying many times yet, it is supportive for silver. And look at this. We had like a really good rally here. We finally broken through 32 and a half. Yesterday, when Trump was talking and signing stuff and announcing delays or what could happen only in April and stuff, I bought some more. I thought we would be in for the break, and break we got. Now, and this one here, I borrowed from Stelios. So Stelios, thank you for lending me this trend line. I just saw this on Stelios' picture. So there is resistance around here, 33.30s. I've got some more around 33 and a half before we can talk about 34. But it is a decent break of this 32 and a half. And as I've been saying, when the conditions are right, where there is a bit more positive news and vibes in a market, silver can outperform gold, and that is exactly what happened. Okay, we saw 0.5% move or a little less even right now. Let's call it 0.5% move in gold, but we did see a 3% move in silver. So this is exactly what I'm talking about when we have the difference between gold and silver. This is exactly what I'm talking about. So that is something that I really wanted to show you guys today. And then the last one that I'm going to show is the cable. Oops, and that is not the cable at all. Is the cable here? Break. We got it, and that's very good news. We also broke the 61.8 of this move lower that we saw in December, January. Another positive, okay. We also went over the prior top of the 5th of February, also positive. And we, for the time being, are holding above. It is positive. Now we are just turning around the top line of this wedge, okay? And we've already been through. We will see what happens this afternoon with the dollar. But I think if you look at if we close the week above 125, 40, 50, let's say, or even around there, that should already be a decent hold for me, at least. And we can then gradually push on a little further. This is how I look at the sterling. If you look at euro sterling, for instance, which is a bit of a barometer of an additional indicator of sterling strength or weakness, it is probing the prior lows as well. It's a bit of a fragile trend line, this one here, but anyway, for the visual effect, it looks pretty. We are trying to come a little lower as well. There as well, I'm a little short against this stuff here too, but it shows that the sterling is still having positive vibes. It has, of course, to do with those data that we saw yesterday, a little better than expected, but also with the fact that the UK has not been specifically targeted by the US yet, although Trump said that Europe and UK better buy some US arms and stuff like that, but it's not being really targeted. So the market also looks at the UK at the sterling a little more positive. Okay, so that is why also the sterling and cable is going a bit faster perhaps than the euro, for instance. And with that, Ryan, I'll give it back to you, and I wish everybody a splendid weekend later.
Thank you very much, mate. Good stuff as always. Kate, I've seen your comment on the FTSE. I'll stick something in the chat room if you're popping in there anytime soon, because I'm keeping an eye on the FTSE. I haven't done anything because I've missed a whole break trade, but there you go. But I'm keeping an eye on it anyway, and the levels and whatnot. Aside from that, thank you everybody for coming to watch us this week. As always, much appreciated. I hope you've had a good week trading. Be safe, be lucky, have a great weekend, and we'll see you on Monday.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.